Hey there, it's Jared Hamilton with the Hamilton Group at Cherry Creek Mortgage, and welcome to another edition of Java with Jared. I've got my coffee. I actually have a donut here, brought donuts in for the team. Wow, what a wonderful Friday morning. Everything is just gorgeous outside. Looks like we're going to have a fantastic weekend, so I hope you guys really are able to enjoy this weather. I'm sure there's going to be a lot of people out there buying houses, and it's wonderful to see such good weather. Hopefully we have all the snow behind us, and we can really begin enjoying spring and looking forward to summer. So have a great weekend. Wanted to let you know what happened with interest rates this week and about the economic data. Interest rates remained very, very low, the lowest since 2013, so the lowest of the year. So interest rates were fantastic, no major movements. Saw a lot of economic data, especially from the housing sector. Federal Housing and Finance Authority released their numbers. It showed that home prices increased about 7.4%. The average home price in the United States is $184,000. So it showed an increase of about 7.41%. So that was good. New home sales, that showed a weaker than expected number, 417,000 units. Expectations were around the 450 mark, so it was a little bit weaker than expected. And existing home sales also came in weaker than expected. That showed annual home sales at a rate of about 4.92 million. Last month it was 4.95, and expectations were for 5.036 million. So that was weaker than expected, and national media was on it. They were saying, does this mean that housing prices are stumbling or housing is stumbling? I don't think so at all. Here's why. It's all about inventories. How many more homes could you have sold if you actually had a lot of good homes to sell people? Inventories are way too low, so people are not putting homes under contract because they can't find a house. That's why those numbers were a little bit weaker than expected. So I don't think it's really anything to worry about. All right. Other economic data, we saw durable goods show a really big drop. It was actually down 5.2%. Expectations were for it to be down, but only by 3%. Not a real big deal because durable goods are all about airplanes, so airplane orders were down. If you factor that out, GDP was, gross domestic product was not as weak as that overall number, only because of airplanes. We also saw GDP released, and that was for the first quarter of this year. It showed an increase of 2.8%. Not a horrible number, not a great number, but the number was also a little bit weaker than expected. Expectations were 2.8 to 3% GDP increase. This number was, though, a lot better than the fourth quarter, which was only up 0.4%. That was a really, really bad number. So the market was really hoping that the first quarter GDP showed, a bigger increase, which it didn't. So, just not really great news for the overall economy. Okay, one other really important piece of information is Sean Donovan, head of FHA. He did say this week that he does not expect any more increases to the FHA mortgage insurance premiums. As you know, this year they increased both the monthly, last year they increased the monthly and the upfront mortgage insurance premium. This year they increased the upfront mortgage insurance premium a little bit, but he's saying FHA is doing good, solvent, about $4 billion of reserves, so everything looks okay with FHA reserves, and there should be no reason for increases. All right, finally, I also wanted to get you a piece of information that I thought was really cool that our clients need to know. Did you know that it's cheaper to buy a house today from a mortgage perspective than it was 30 years ago? That's right. Back in 1980, average home prices were about $93,000. Interest rates were at 13.5% on average for a 30-year fixed rate. Today, average home prices, as I said earlier, was $184,000. And interest rates are at 3.5%. Now, taxes and insurance were cheaper back then, but if you factor in today's higher taxes and insurance rate and the mortgage principal and interest or the monthly payment on a mortgage is about $50 cheaper today than it was 30 years ago. And I think that's something that our clients need to hear because of interest rates. Home affordability is fantastic. Now, that doesn't even factor in inflation. People are making a lot more money today than they were back in 1980. So home affordability from a monthly perspective given where interest rates are and where income is, has never been as good or, in recent history. It's fantastic. So our clients need to know that. Hope you guys have a wonderful weekend again, and again, enjoy the weather. I'm going to enjoy the weather and my donut. If you guys ever have any questions, please give me a call. Thanks for joining me with Java with Jared, and we'll talk to you soon. Bye-bye.